Alright guys, so is the sky falling down again? Yes, the sky is falling down again, and we must address the disastrous meltdown of a press conference yesterday. We had Scott Bessent take center stage telling the world that the US is winning and that resistance is futile. But in reality, this was pure damage control. The trade war is not going well, and everything that happened was to explain why the house burning down is good news. And when asked about the onshoring plan, Bessent told the US public that the data is strong and everything is fine.
What are American manufacturers not understanding about your push for onshoring in the U.S.?
Well, I think I was in the investment business 35 years, and I learned to ignore the survey data and look at the actual data, and the actual data has been quite good. The job data is good. Americans keep spending, and as Caroline said, we have these incredible commitments to bring manufacturing back on shore with record investment by domestic corporations and foreigners who want to come into the U.S.
So according to him, the jobs data is good and US consumer spending is strong. But is that really the case? We have the latest data on hand and without a doubt it's downright horrible. US job openings have fallen to the lowest level since September. It has dropped from 7.5 million jobs to under 7.2 million in a single month. So if someone gets unemployed, there are fewer jobs in the employment market. But oh, it gets worse, guys. In 2022, there were 2 job openings for every unemployed worker, but this has fallen down to just 1 opening for each person without a job. So there are now fewer jobs in the US, and getting one is going to get much more competitive. So when Bessent says the job data is good, is he really talking about the US economy? He is caught in the Bermuda Triangle because the outlook is getting bleaker and bleaker. Is the US consumer really as strong as Bessent says? The US economy is 70% private consumption, so if people spend less, GDP will crater, especially when there's no government spending rescue coming. Well, US consumer confidence has slumped to a 5-year low. According to the conference board, US consumers are collapsing. In fact, this decline is 5 months in a row, the longest stretch since 2008. In another gauge, consumer sentiment is also falling down fast. Why? Because inflation expectations for the next 10 years are at its highest level since 1991. Consumers are expecting prices to fly up by 4.4% annually. So they are hunkering down now. Trump's tariff has sent US consumers into a tailspin, and getting out of this downward spiral won't be easy at all. Bessent saying US jobs and spending remaining strong is very disingenuous. This is bad for people trying to plan, people trying to invest, and people trying to survive. It's not good at all. And the more he goes on, the worse the press conference gets. And when asked about shocks in the supply chain, Bessent entered full deflection and deny mood.
Does the administration anticipate supply chain shocks or supply shocks coming now that cargo shipments from China are significantly down? And if so, are there plans in the process of how to address that?
I wouldn't think that we would have supply chain shocks, and I think retailers they have managed their inventory in front of this. I speak to dozens of companies, sometimes daily, but definitely weekly, and they know that President Trump is committed to fair trade and have planned accordingly.
Now, it's hilarious to watch, but also extremely scary at the same time. It tells us that the White House doesn't know what's going on the ground, and Bessent has lost touch with everything. This is very alarming. Retailers cannot manage their inventory because there's no clear signal on how to proceed. Firstly, whether they pre-ordered or not, the tariffs will have to be paid when they take delivery. It's at the point of arrival that tariffs are paid to US customs. And secondly, the White House keeps flip-flopping on the tariffs. There's no certainty at all, and there can be no preparation possible as a consequence. This most certainly guarantees a supply shock is coming, and if the tariffs actually go up, this will destabilize the house of cards even further. And it's important we debunk more of Bessent's statements. A lot of them sound good, but when we dig into details, it's just horrible. Now listen to his claim that tariffs replace a big portion of income tax.
So we're going to take in long-term tariff revenue. We put a process in place. What President Trump is referring to is the ability for tariff revenue to give income tax relief. And I think there's a very good chance that we will see this in the upcoming tax bill. So tariff income could be used for tax relief on all of those immediately.
That there is a role for significant tariff revenue in U.S. fiscal policy.
I think that it is something that got put away a long time ago, and I think that tariffs will bring back American manufacturing and generate substantial revenues.
This is a disaster of a briefing. It tells us that Trump really believes he can generate enough revenue from tariffs, from income tax relief. And who's going to pay for those tariffs once again? It's the US consumer. They will absorb the majority of the pain. So you are taxing their consumption to bring down their income tax so that they can consume again and pay even more tariffs. Do you see the weird logic going on? This is a flywheel of stupidity of the highest order. And how do you even expect to bring in enough revenue? People would be in panic mode, and as a result, they will consume less. Trump wants to remove income tax for households making 200 grand or less. They paid 675 billion in federal income taxes in 2022. And how much did tariff revenue generate in the same period? $98 billion. So how are you going to make up for the shortfall? You have to borrow money, which means issuing more bonds, and can the global market take even more supply of US treasuries? And this will most definitely tank the dollar as well. But let's talk about the main event, the US-China trade war. And in our previous video, we talked about the US supply crash. Imports from around the world, especially those from China, they have dropped by 40 to 50% in a single week. However, the administration still believes deep down they can win this, that China will lose the trade war, and Washington still wants to make Beijing grovel.
That over time we will see that the Chinese tariffs are unsustainable for China. I've seen some very large numbers over the past few days that show if these numbers stay on, Chinese could lose 10 million jobs very quickly, and even if there is a drop in the tariffs, that they could lose 5 million jobs. So remember that we are the deficit country. They sell almost 5 times more goods to us than we sell to them. So the onus will be on them to take off these tariffs. They're unsustainable for them.
So Bessent is still peddling the deficit and surplus country nonsense. But what's shocking is his belief that China will lose 10 million jobs if this drags on long enough. We are locked in another fight of who will flinch first. The White House and China, they sure aren't talking. Beijing also wants the US to drop their tariff first, which means we are now in an impasse. But will China's economy really collapse? Chances are very slim because they have two big advantages that Bessent keeps downplaying. Because of US tariffs, more countries around the world will export less to the US and import more from China, and that's the top left part of the chart, which means the US ultimately loses while China's trade won't really collapse. And here's why. When the US imposes tariffs on global exports, this will reduce trade between the US and the world. As a result, countries, they all earn less. Now they have to make adjustments. They'll need to lower their cost of production, so buying more cheap Chinese intermediate goods is very necessary. Their own consumers will also spend less, they have less spending power. So buying more affordable goods is necessary. And the last thing these countries want is higher inflation. But another point that Bessent forgets is China's own stimulus. The US economy and the Chinese economy today are in very different places. China is rolling out more employment support and helping their exporters by giving a lot of loans. Unlike the US that can't borrow money for stimulus, Chinese bond yields are low enough. Now Beijing's 10-year yield is only at 1.6%, but for US treasuries, it's more than double at 4.2%. So China can borrow money at a big discount at less than half of the cost of the US. So they can fire their stimulus bazooka multiple times if needed. However, it isn't the same for Bessent's bond market. The US Treasury term premium has been surging since Trump took office. The difference in yields between the 10-year and shorter term bonds is about to crack 1%, which means Across the board, borrowing costs in the US has gone up as well. So personal loans, mortgages and credit cards, the borrowing costs aren't coming down, they might even go up. US consumers today are not finding any relief. So we are now caught in a battle of economic attrition. Who can last longer? Will Chinese exporters collapse first? Or will the US consumer tap out and a recession happens? This is the big question. Well, either way, it's not looking good for US stocks and bonds. Deutsche Bank believes foreigners will continue to dump US assets. The market recovery of the past week is false, and the sell-off will likely continue. Really remember what drives asset prices in the US or anywhere else. It's the strength of the economy, and whether it will grow or whether it will plummet. If people in the US have money to spend and consume, it's good news for investors. But if they don't, then the outlook for the dollar, US bonds and stocks will all crash. Even today, people in the White House, they are not taking the tariffs seriously enough. Lutnick believes prices just won't change.
Forget about Amazon. If a company were to say we're raising prices because of the tariff, is that a hostile act?
I think if you go out of your way to try to make it seem like your price has changed when it's nonsense, okay? A 10% tariff.
Why is that nonsense?
Because a 10% tariff is not going to change virtually any price. The only price it would change would be a product that we don't make here, like a mango. You know, if we don't have mangoes here and we charge 10%.
Hopefully nobody's making mangoes.
Right.
Yes, you're
correct. Or cocoa, right? We don't grow cocoa in America.
The prevailing idea in the US is that tariffs don't raise prices, and that's the Commerce Secretary with his own brand of voodoo economics. If that's the line of thinking, then the tariff war just won't end until something breaks again. We are being railroaded towards a recession, and investors just aren't buying what Lutnick is selling. The bank sees twin sets of evidence that foreign money is running away from anything US. There's very rapid slowing in US capital inflows, so less money is coming in. Plus, the bank observes active disinvestment from US assets, and that's a fancy way of saying people are dumping everything. ETF investors are selling US bonds, and foreign ETFs holding US stocks are also divesting. So the whipsaw action, all the buying today, the buying over the last week, could be mainly just from domestic US investors. And once again, this is not ideal. If foreign money leaves, how can prices recover? And then again, if the US is being railroaded towards a recession and a full trade war, who will want to allocate money there? It's tempting to assume that US investors themselves, they can hold up the sky, but that's not true. Without foreign capital, the entire economy itself starts to destabilize. Take the treasury market for example and analyze foreign buying. Since 2010, the demand for US bonds have been dropping in aggregate. Official buying, which means central banks, have been falling like a rock. The main driver of demand has been private investors. Ever since the Russia-Ukraine war, that has been the case. This is a big problem. Central banks buying US bonds normally hold them for a long time, but private investors do not. They are buying not as reserves, they buy to make money on their positions. So bond yields will continue to get more volatile while borrowing costs continues to rise. Prices will ultimately go up and consumption will get even more expensive in the US. Now, we are not saying that US asset prices will crash to zero. What global banks are pointing to is a world where the reward is no longer worth the risk. US stocks and bonds could underperform global assets for a long time to come. Once again, Goldman brings us the doom and gloom. Thanks to the trade war, they expect the US to be the worst performing economy of the entire G10. Economic growth will be crushed, while inflation will be the highest of any developed country. Of all the Western economies, the US will perform the worst. And knowing this, it's hard for investors to get back into the action. Everything is pointing to a consumer collapse, which will crater earnings down the line. So without a doubt, the myth of the US being exceptional is starting to erode. It's just like any other country today. When you make bad decisions, especially when it involves the world, your economy will get punished. People and investors, they will simply walk away. But let me know what you think. Will China really lose 10 million jobs? And will the US ever U-turn on this crazy tariff war? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.